And this will tell us where kind of sentiment and momentum, kind of where the universe is going to more or less pull gold eventually. It is going to want to see gold up to about 4,700 somewhere, which is about a 15% move. And then it's going to want to go all the way up around 26% move to about $5,200 per ounce. So that would be the next move. And I think if the market is where I think it is over the next 2 or 3 months, I think we could see gold surge up to this level. I do think silver could rally to like 61, 71, potentially actually blow off into the 80s. $80 per ounce over the next 1 to 3 months. I think it has this potential to go parabolic.
If global markets are truly approaching an inflection point, then the precious metals landscape may be on the verge of its most dramatic shift in decades. This is the view presented by Chris Vermeulen, founder of TheTechnicalTraders, who outlines a scenario in which both silver and gold enter explosive, final phase rallies before undergoing a major multi-month correction that sets the stage for a far larger, multi-year bull market. His analysis suggests that the next few months could deliver both extraordinary upside and equally sharp reversals, conditions that require disciplined, unbiased decision-making rather than emotional attachment to any single asset. Gold, meanwhile, is developing what Vermeulen describes as a controlled stair-step advance, characterized by a series of bull flag formations on the daily chart. Each consolidation has brought stability rather than exhaustion, suggesting a healthy uptrend instead of a destabilizing blow-off. Using Fibonacci extensions, he identifies upside targets near the $4,700 level, a move of roughly 14 to 15%, and a secondary projection around $5,200, representing a 26% extension. If you found this video insightful, then please like and subscribe my channel. Also hit the bell icon for more updates. Vermeulen notes that silver, in particular, is showing the technical characteristics of a market with parabolic potential. In his view, the metal could rally into the 60s and 70s, with the possibility of an overshoot into the $80 range within 1 to 3 months if current momentum accelerates. He acknowledges that extremely bullish interpretations, such as the long-discussed giant cup and handle pattern, can theoretically project prices toward $150 or even $200. Yet he cautions that such patterns often blind investors by creating unrealistic expectations and encouraging them to hold through deep drawdowns that can erase 70 to 80% of their capital over long cycles. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
Yeah, I mean, when I look at gold, I think gold's going to end up having a very nice move here to the upside. I can share my screen and just kind of show you what the chart of gold is pointing to. So this is the daily chart of gold. It's had a series of bull flag patterns. So it has a big run up and then it pauses for a while, which is what you want. It has a big run up, then it pauses. We've had a nice run up and now it's pausing. So it's stair stepping its way up. This is more so a controlled move. You don't want really something that just goes parabolic straight up. Even though you could argue when you zoom out on this chart, it is a fairly parabolic move. But after this, if we were to use a Fibonacci extension, which is one of the most powerful technical tools I think you can use for charting, it will give us an idea of where the next upside targets are. And so we can just base it off the rally. So from the low over here to the high and back down. And this will tell us where kind of sentiment and momentum, kind of where the universe is going to more or less pull gold eventually. It is going to want to see gold up to about 4,700 somewhere, which is about a 15% move. And then it's going to want to go all the way up around 26% move to about $5,200 per ounce. So that would be the next move. And I think if the market is where I think it is over the next 2 or 3 months, I think we could see gold surge up to this level. I also think the stock market could have a very sharp sell-off going forward. So I think, over the next 3 to 6 months, we're going to see probably the gold market and precious metals top out. We're probably also going to see the equities market top out. I think there's going to be a lot of volatility, a lot of big sideways and huge range of the market, kind of both markets kind of trying to figure out what they're going to do. So, I mean, If I had to look forward, 2, 3 years from now, I think we probably see the stock market sharply lower or potentially still where it is, but it's probably have had a huge sell-off along the way. I think precious metals over the next 6, 12 months are going to be lower than where they are right now. I think, or maybe potentially where they are right now, but they'll have already rallied up and come back down. If you want to be really bullish, which is generally whoever's looking at this for silver, that could give you like this pattern could give you a $150 to $200 silver, which is what everybody wants to hear, which is why a lot of people talk about this giant cup and handle pattern, I think, is because it can give you these giant upside targets. And I mean, I just kind of focus on one bull market at a time because if you just look at this chart and you were to go to a fifth grader, anyone, you go, what happens after a spike, right? What's going to happen next? And everybody will say almost the exact same thing. They'll be like, oh, it goes straight back down, except for if you're in love with the commodity, you're going to be like, no, no, this is going to 200. So, it all comes down to a bias. Like I strip the bias out. I don't really love I only like or love an investment when it's working for me and when it's moving up. And I could care less if I own it. If it starts to go down, I just get rid of it. And I only like what is in favor at the given time, right? So
Mhm. Chris,
I think we could see silver have a very big move still. I think it could go up to the 60s, 70s, maybe go up into the 80s, but I wouldn't be factoring this cup and handle pattern. It just blindsides you. It makes you think there's so much upside that you're going to ride out, you're going to ride out 10, 15-year cycles to the downside where you lose 70, 80% of your value. And I don't believe in that kind of volatility for a portfolio.
From Vermeulen's perspective, the larger cycle is approaching a critical turning point. Over the next 3 to 6 months, he expects precious metals and equities to begin topping out, followed by a period of heightened volatility in which both markets struggle for direction. He argues that gold may complete its current rally, pull back significantly, and then set the stage for a much larger, multi-year bull phase. This next major advance, he suggests, could begin only after a substantial correction, similar to the 34% decline gold experienced after its 2007 peak. He sees the upcoming downturn as a reset that will create extraordinary opportunities, particularly in junior and microcap mining stocks, which historically have surged after major market bottoms. Vermeulen also highlights the psychological and macroeconomic backdrop driving the current movement into precious metals. Investors worldwide are increasingly uneasy, reflecting deep mistrust in governments, financial systems, and fiat currencies. Gold, silver, platinum, and related metals have benefited from this fear-driven environment, becoming one of the most crowded trades in recent months. However, he emphasizes that the US dollar index is showing signs of carving out a bottom. Historically, during global crises, the dollar often strengthens, not weakens, creating short-term headwinds for metals even as long-term fundamentals remain supportive. Let's get back to the video.
So if we were to look at this chart, this is back in 2007. We saw the stock market peaked, gold put in a peak, and then it went into this multi-wave correction where gold pulled back 34%. And so I believe we're kind of like right here in gold. I believe we've got like one more push up, a couple more of these monthly bars pushed to the upside. And then I think we're going to have this big pullback. And that'll be the financial reset. There'll be all kinds of stuff happening. After it puts in a bottom, that is when we go into the big multi-year phase of a rally for gold. I believe this is when the miners will come to life. This is when the miners really came to life last time. It was after the correction, the juniors, the micros, all just went absolutely ballistic for many years. So if I was to just go back onto this chart of show you where I think we are right now, I think we're going to see gold rally up. Let me grab a pencil here. And then we're going to see it go into a multi-month pullback. And then somewhere over here, after it's blown up, it's gone and hit these upward targets and pulled back. I think this is when you get invested back in the juniors and the mining stocks. And that's when gold, I think, is going to have the next really big push that lasts a long time, where we see that maybe the US dollar actually does collapse after we have this next reset. and gold becomes, the ultimate kind of reserve currency, or the ultimate safe haven from currency collapse. And that's where gold could go to 5,000, 12,000. Who knows after that? And that's when you want to get involved, I think, in the juniors. That's when they come to life, in my opinion. Uncertainty, there's a lot of fear in the market. Mostly we see that when you look at the precious metals space. So we've seen gold, silver, platinum, palladium, all of those have taken off. They've been going up for a long time, but really it became a crowded trade really in the last month and a half, 2 months. We saw a lot of people really pile into that space, and we've seen some pretty big moves. Now, over the last month or so, we have had a pullback. It got a little frothy there, but the precious metal space, from a big picture, global picture, macro, is telling us that people don't trust governments, they don't trust systems, they don't trust currencies. And the US dollar the dollar index itself has been carving out a bottom, what looks to be like it's ready to start a big rally. And typically, when we see a global crisis and financial major problems, we tend to see the US dollar index actually perform very well and move higher.
If this pattern repeats, the combination of a rising dollar, an overextended precious metals trade, and a weakening equity market could deliver a turbulent period before the next major cycle begins. Vermeulen's view remains balanced. He sees substantial near-term opportunity but warns against complacency. The real, generational bull market in gold and mining equities, he suggests, may only begin after the upcoming correction clears excess speculation and resets market psychology. In this framework, the next few months are not merely about chasing rising prices but understanding where markets stand within a broader structural transition. If gold completes its current run and enters a multi-month decline, long-term investors may finally get the entry point that positions them for the next major advance. For those focusing on mining stocks, particularly juniors, the most explosive gains could emerge only after this reset has fully unfolded. The possibility of gold eventually reaching levels like $8,000, $10,000, or even higher remains tied not to immediate market enthusiasm but to a future environment shaped by currency instability, systemic realignment, and renewed demand for hard assets. As global uncertainty deepens, investors may increasingly thinking if precious metals surge, correct, and then enter the largest structural bull market of the decade, who will be positioned to recognize the turning point and who will be caught on the wrong side of the cycle? Thanks for watching. Don't forget to like, subscribe, and share for more market insights and analysis.